Awesome. Jeanette, you want to give us some definitions maybe for NFT?
Sure. And an NFT is a way to distribute collectibles primarily, but it's a way where you can put an art piece into a space, or a trading card or a crypto kitty, and you can have auctions for these materials. Now, one thing that's really important to understand about NFTs as they stand is, right now it's almost like a certificate of ownership. Often the NFT itself, the file, is not embedded in there. If it's a piece of art or something, that art lives outside of the NFT, but the NFT proves that you own it. So that's just a really sort of basic definition, and I'm sure our expert panel have some things they'd like to add.
I would love to add. My favorite definition of blockchain is it's an unfuckwithable ledger of what actually happened. That doesn't necessarily mean it was true. It means it happened. Um, Fungible tokens like Bitcoin are like dollars. They can be broken up 100 pennies, 4 quarters, 20 nickels. It's all the same thing. It's a dollar. Non fungible means it is a unique singular item that cannot be divided. The first thing that I did for this was actually for to replace bricks in front of a hospital, believe it or not, in 2015, before Ethereum was even able to do this, and it wasn't a thing. We were looking at doing it on Bitcoin. It was too expensive, but to basically come up with a way for people to do sponsorship for nonprofit projects, and instead of bricks, have it be a digital donor wall. So they're great for certificates of authenticity, as Jeanette was saying. We've been doing it for luxury goods. A great example is a ticket to a basketball game. That basketball game happens on a certain date. It is for a particular seat, and it is only good for that date and that seat, and that's it. It is a singular thing. It cannot be divided. You're not putting two butts in the same seat. So that's a good example of what non fungible means. How we're using them today are things like outfits in the metaverse. So you can buy NFTs of particular Nike shoes, or a particular designer dress, and your avatar in the metaverse can wear these things. It's also art. It's also memoria, not memorabilia. Like we're NFTing the Grease car from the movie Grease, and there, believe it or not, there's a huge fan base. And then the gamification, like Blockchain Heroes, where you've got collectible cards, just like baseball cards, and they're delivered in packs that are mysteries until you open them, and then you want to trade with other people, incentivizing transaction values, and that increases the value of the entire project. So pretty much my philosophy is an NFT can be anything. Put your mind to it, think about what you want to do, and I can figure out a way to make it into an NFT and drive more adoption.
I totally agree with you both. I would like to add that the general vision of NFTs could be split into NFTs that are attached to actual existing and tangible things in the real world, and there are NFTs that are native to the blockchain. So as Adrienne was describing, an outfit for a game, or a lot of valuable elements that you get while playing these virtual reality games, could be an example of a native NFT, because it was created and exists just in this cloud, or in this idea of the blockchain and within the game you're playing. On the contrary, as Janet indicated, for fashion and certification of uniqueness, you will be having this NFT that is somehow attached to an actual, I don't know, Gucci purse. And if you want to know that this designer item is real, the designer is providing you with a blockchain address, a hash, which is attached to this specific item, and that's how you go and check that you are getting a legit item.
So in terms of, let's just maybe spend a little bit more time on difference between fungible and non-fungible tokens. And even though they're both called tokens, they're used fundamentally differently, as a technology.
Yeah, one.
Actually, before we go
Okay, go
on
ahead.
to fungible versus non-fungible, I just wanted to address the issue of rights. Ownership in general is a matter of enforcement, and enforcement is typically done through courts. NFTs do not convey ownership of anything other than ownership of the NFT, because they are not recognized by courts as a proxy for a real world item. So I think that's an important distinction to make for newbies, because when you buy an NFT, it doesn't actually give you the rights to anything. It just means you own the NFT. That's it.
Yeah,
Well, I think there might be a bit more of uses. It is true that the NFT is not a legal title by itself, but in the realm of intellectual property, one of the first things you need to do is demonstrate that you were the creator or the first one to bring this idea, this art piece, this music into the world. So by attaching a hash that represents this NFT, you could be creating the proof that will help you to defend your case into a court. So while it is absolutely correct that it does not give you legal title to be enforced, it can be an element of proof to demonstrate that the actual creator is someone in particular holding this hash.
Yeah, it depends on jurisdiction. In Liechtenstein, the courts will actually recognize NFTs and other crypto assets as bearer instruments, and they actually have created a legal binding between tokens and shares in a company and even debt. So you can actually just show up to court, pull out your wallet, and say, "Here, I own this because it's in my wallet." But outside of that, on a jurisdiction by jurisdiction basis, that's largely not the case. So they may have some uses, but I think that we need for newbies to understand that NFT tokens don't actually confer any rights to some underlying. And just to address the issue of intellectual property, yes, you're right, but intellectual property is fairly clearly defined in terms of patents, copyrights, and trademarks, none of which an NFT is. So, I mean, there's no registrations for anything with an NFT, so that's wholly untested territory.
Okay, so I think what we're saying here perhaps is that the legal and the jurisdiction, the underlying information about the ownership attached to the NFTs that have been minted is not really a legal ownership. It doesn't give you the legal rights to the actual project. However, it creates a data file. And if you start thinking of NFTs as a technology that's creating data files attached to digital goods and physical goods as well, then all of a sudden you can think of this as a supply chain management solution. What does that mean? If you're tracking, film and television, projects, and you have to, deal with variety of parties participating in these projects, you can use this for supply chain management. I'm sure there are many other industries where this would be applicable, and I think that's sort of the future of where this is going. But I think what you're addressing could be the current status of the space where people are selling artwork, and selling collectibles, etc. So those are
Yeah,
great points.
my comments apply only to the use of NFTs as a proxy for a real world item. In situations where the NFT is the asset itself, for example, when you issue a concert ticket, that concert ticket issued by a company is the right in itself, and if that right chooses to be embodied in an NFT, then that NFT is completely authoritative and valuable in that sense, right? So that is the legal right, because the company that issued it said so. But that is not a proxy for anything. That is the thing itself.
I agree, Eric, but I think it's helpful to think about NFTs right now as primarily a way of conveying status, right? I think that NFTs in the future are going to have much more utility, like Mariana was talking about with the supply chain. But right now, NFT is a license to say how cool you are in a lot of cases. It's like, I have the coolest trading card, I have the coolest piece of art, and it's that sort of status that's driving a lot of the NFTs right now.
Oh, absolutely. I'm not arguing that there aren't valid use cases for NFTs. If the status is 5 stars on your profile, or an NFT versus another one, then absolutely. My point is merely that we mustn't mislead anyone into thinking that by owning an NFT they own something else, like a real world thing.
Yeah, so I think with NFTs, most people would say to me that I've spoken to that are new to the space, they would say, well, I need to hire a lawyer who understands NFTs. And to me, that is kind of like putting, trying to solve a problem with something that needs to happen like 5 steps down the road. Like, first thing that you need to do is you need to hire, Adrian, or, Jeanette or Eric, or someone who knows the space to help you figure out the strategy for your particular business with NFTs. What does it mean? Should you do it? What function does it replace or add to your business? Should it be, an NFT, or should it be a tokenized DeFi type situation? And how does that matter to you as a business? And then I would say 5 or 6 kind of steps down the road, you're going to get to jurisdiction issues and legal issues and creating contracts and maybe attaching contracts to the blockchain transaction. That's the way I think of it. How do you guys think?
Absolutely. I think the whole variety of ERC tokens are evolving constantly. So the first thing everybody that gets into the space needs to do is to research and understand as much as possible about the blockchain dimension. I used to say that it's a new dimension. In fact, as an attorney, that's why I wanted to get into the space, because I realized that the context in which the rights were being represented was shifting. It was a new reality, and there will be new ways of supporting rights. So the first thing people needs to do is, as you say, to focus on what's your business model or your need. Then try to understand what's out there in the blockchain space that could satisfy this particular situation. And once you understand it, then you start to create assets and ownership over things. So I totally agree that the first thing to do is to research and educate yourself. And things keep evolving every day. It's like I spend a third of the day just checking out new things that are coming out every day.
Yeah, I'm
Mariana.
actually.
Oh, I was just going to say, Mariana, it looks like Caleb has a question. Can we turn to him and get his question?
I'm not seeing it on my screen.
Oh, I
Oh, there.
opened the
Hi,
room.
Caleb. How are you?
Hey, good.
Yep.
How are you?
Go ahead and ask your question, Caleb.
Yeah. So actually, this is really interesting. I only get on Clubhouse probably like once every 2 months. So, it was cool to kind of see this space. So me and a partner are developing. We're currently developing a marketplace, stateside, based on the Flow network in collaboration with Dapper Labs, which I'm not sure if you know who they are.
Yes.
Everybody knows Dapper Lab.
Okay. Yes. So we're working with Dapper Labs. So we're building, and it's fun to get into like these types of spaces because I wanted to hear maybe from you guys what you think. We are creating this basically out of what we felt was a necessity from frustrations we had heard in the community, from buyers and from creators, when it comes to Nifty Gateway and Rarible. And we're building, I mean, we already have probably a couple $100,000 worth of code created. But we're building basically the next marketplace stateside, in conjunction with using some of the technologies they use with Top Shot. And I was curious what you guys, I mean, maybe what your qualms and frustrations are from the current marketplaces that are available and what you would like to see more of.
I can give you the whole list. You got a paper and pen?
Oh my goodness. Yeah, hold on. Let me pull a
Or grab
notes tab.
yeah, or grab a second phone and put on otter.ai. That's your best friend, trust me. Okay, problems with the marketplaces. Number one, the royalty issue. The benefit of doing it on Flow is pretty much centralized. It's not decentralized. That particular piece of it is awesome because if you're going to be doing something that is popular with the mainstream consumer, they don't understand the concept of your keys, your coins, and if you lose it, it's your responsibility. So you need to always maintain both the ability to hold their keys for them so that they can do password resets and all of those things, as well as give people the ability to hold their own stuff and their own keys, and if they lose it, they lose it. um, make sure there's both. The second thing, the royalty continuation, that I'm on line 1634 of a marketplace of my own, writing in the absolute requirement that royalties be paid or it self-destructs. Let me tell you, it kind of works. It works on Chromia, which is a layer 2 protocol. It's a completely different language, so it doesn't transfer over on Solidity. I've been trying to make Solidity do it, but it doesn't seem to want to self-destruct. And I love that feature. So royalties are paid or it self-destructs. There we go. Makes it easy. And then the other thing that you want is the ability for anyone with a WordPress plugin to embed their collection or their account into their own website. You'll still function as the back end, but then that will give everyone the ability to drive traffic to their own website, which is where I think you're going to have a lot of resistance from a lot of people who would be doing NFTs and doing more NFTs, but they don't want to spend the money and do a launch where they're driving traffic to a third party where they don't get the benefit of that ongoing long-term lifetime SEO. You want to make sure that there is an ability to do large file formats. And I don't know how you want to work that out, but my very first NFT that I did was actually I redrew a photo that I had taken like 20 years ago of me screaming with like my hair like totally wigged out. It was the cover of a punk album called Connie and the Cocksuckers. It was hilarious. It's a punk rock thing. It was awesome though. My scream was great. So I redrew that and animated it and called it it was the outrage economy. But the problem is when I GIFed it and I made it into an animated GIF, it was like 65 megs. And squishing it did not make it better. it was very difficult. So you want to, one of the big things, there are a couple platforms out there that let you go to 100 megs. That would be amazing. You need to solve for the IPFS issue, which is if you're not paying for IPFS, it could randomly not be available if not enough people are hosting it. So you want to make sure that there's a way for whoever is minting it to come up with some kind of lifetime storage capability where, say, your platform goes down. This is the other piece. If your platform goes away, do all of those NFT pieces go away? Give them some kind of insurance that that's not going to happen and that the content and the NFTs will be available for in perpetuity. What are some of the other things that are like really, really important? Oh, ease of use. So Wax is like the most amazing, fabulous. Set up your account. Boom. Okay, I have an account. Now what? Minting on Wax is not very easy. It is easy if you're technical, but if you're not technical, it's like 15 different YouTube videos before you really feel like you can do it. And then the different pieces that you can add in there are very code oriented. So you want to make it more consumer friendly. The other piece of that is Wax Packs, like the drops, like I was saying earlier about Blockchain Heroes and the ability to do these gamified card things. That's like super, super sexy and custom code pretty much everywhere. So if you can make that a built-in functionality piece, you're going to drive a ton of adoption with people that do things like Magic the Gathering and those kinds of trading card games. You're going to bring in a lot more people for that, because that's something that everybody wants, and I'm literally hand coding it, and it's not fun. And I've probably blown through I don't know, 20 ETH on the test net. That's a lot of ETH, by the way. Imagine if I had actually blown that on the main net. That would be $40,000 in testing where I've minted it and I blew it. So just make it a standard thing that makes it super easy and people will love you. There was one more thing that I was going to, one more thing. The most important thing. Okay. And this is something you should connect with me offline because I'm working on it. Um, the ability to identify the author, not just the wallet. So if you look up Mr. Nobody Sleep Mint 5,000 days. So this hacker basically bastardized an Ethereum contract, removed the security, and minted version 2 of Beeple's 5,000 days in Beeple's wallet, and then transferred it to another wallet auto magically, right? So anybody who's doing some surface level due diligence would say, oh, this was originally in Beeple's wallet, so it must be Beeple. No, it wasn't. So I'm working on an identity protocol that will actually require the authority to mint in that wallet as an additional piece, because anybody can mint anything. Like I was saying earlier in my definition, it's an unfuckwithable ledger of what actually happened. Anybody can mint anything. Anybody can make any contract. There's no barrier to entry other than you can code it, you can put it in Remix, and you can hit submit. So the ability to actually authorize a transaction to say, yes, I, this human being with agency over this particular product, said, yes, this is the minting of this. Like that extra little lever, think of it like two-factor authentication for NFTs. So adding that into the mix where you give people the ability to do that, because consumers don't understand how to go through Etherscan or Binance Scan, whatever, and track back and see, okay, this was the wallet it was minted in. Great, that's step one. But what contract was used to actually mint it? That's step two. And they can't read the code. So that part of that diligence is unnecessary when you have the authority of a human being that says, yes, I did this. This is Adrienne, and I'm done speaking. But hit me up on the back end. I have more to say about the ID.
Yeah, of course. Thank you very much. That last piece you actually said is something we're actually building into the website itself for consumers. So I 100%,
Yep.
100% agree with you on that end.
Yeah.
Also, just as a
Crucial.
quick note on the use of 5PFS, there are actually pinning services out there that you can use to make sure that your content sticks around.
So Caleb, just a quick question for you on the demographic that you're trying to actually reach with your marketplace. Are you building this for people who are selling NFTs? They're Hollywood creators like musicians, film, television, talent, influencers, and they want to create a business extension for themselves using NFTs. Are you creating this as an e-commerce marketplace or secondary e-commerce marketplace? What is the actual focus of this business?
So the beauty of what we do is, and also somewhat the curse, is we're not exactly the same when it comes to like Nifty. So you're not going to, it is mostly VIPs and those we select to work with. So some of the people that we have been talking with come from, like, we've been in talks with the D'Amelio family, like the TikTok superstars, etc. Also, we've been in talks with like people like Daniel Arasham, who did not like their Nifty Gateway drop. It didn't do what they wanted to do. And we're also providing other services on top of just being a marketplace and making the tokens for them and minting everything and providing backend security. We're also handling marketability. We are doing marketing stunts, so to speak. I mean, one of our contracts that we have 2 contracts coming up with 2 corporations that we're getting finalized. One is with Wendy's for a charity piece, and then the other for the Dave Thomas Foundation, and the other is with Maserati on the upcoming of their new supercar. So we have a lot of different kind of moving pieces, and our market's basically to draw people. Our idea and our vision and what we want is to draw people to blockchain. One of the things we're going to do that Dapper has been really good at is people can purchase with dollar currency if they want, or pounds or euros or yen, and it will be transferred to Ether and then moved into our wallet and then into the artist's wallet. And we are basically creating, what we want to create is enough options for people and enough content and enough product that people of any type of, with any interest of collecting, say like you purchase the product we're doing for Maserati, you're not just getting an NFT, you're getting some other stuff. And it is to attract people to the blockchain. Flow's goal is to get 1 billion people on blockchain. And our goal is to work within that sphere and to gather people onto our platform in order to do that, so that, you know, if somebody really is interested in something and not interested in the other things, we're just trying to bring a whole swath of people over. But it's mostly with curated NFTs and content and things like that. So it's not an open platform, but it is built to gather a lot of users, I guess, so to speak.
Well, I mean, that's good. And I totally understand that you have to try a few things right now because we're so early in the space. We don't know what sort of an end-to-end business can you build out for a variety of talent that needs the platform, right? What's going to be challenging to do is to do everything for them, right? So if you decide, yes, they're going to mint the NFTs on our NFT marketplace, then we're going to also help them out, help them market this, because that's kind of a key component, right, to get the revenue going. And then we're also going to help them get some branded integration into this. Now you're kind of a digital agency and you're also an NFTs marketplace, and that's okay. Those are complementary businesses, but it would be interesting to look at the space from like a bigger picture perspective and say to yourself, okay, this type of talent needs to sell tickets to their performances. They also need sort of VIP, kind of passes, VIP experiences attached to their performances, and they don't really have a platform today in the existing platforms out there to get all those services done. And maybe you cater to them first and you prove the concept and it works great, and you realize, oh, I need few more things to do for this group of people in order to deliver the experience that their users want and they want as a talent producer. So I feel that at the moment, keeping it a closed platform, it's more like a digital agency trying to create something that's self-sustaining and sort of open to everyone who wants to engage in this way and needs this kind of service in the future is sort of the big idea that can scale. So those are some of the things I would think about as you're developing this.
Yeah, I appreciate that. Thank you.
but good job. I mean, all this needs to be done for sure. So let's talk a little bit about DeFi. As you know, clearly the other thing, I think, Caleb, just one more thing to think about is I believe very strongly that the future of NFTs lies in consumer commerce, and it's the largest marketplace anyway. It's in trillions, right? And so if you think of these products that you're developing for talent as something that can be developed, in conjunction to selling products and services on their behalf in the future, think of it that way versus how can I, fully service just this one brand, just this one group of talent, performers today. That may be a platform that no one has that would sort of put you on the map and allow you to kind of capture most of the marketplace. So I think those are all things that one should consider in developing these platforms inside what Leah was talking about, sort of the blockchain dimension. It really is a different sort of coordinate system. It's not kind of developing ventures like we had I've done it for a couple of decades in a variety of innovative technologies. But with the blockchain, um, there are many different directions that you can take an NFTs marketplace. You can take it into the e-commerce direction alone. You can take it into direction of replacing just market incentives and viewer, user, consumer participation inside a space, and you can just build that platform with NFTs. You can take it into supply chain management and just build that platform. And you can take it into, a better version of what's available today, in terms of some of these early NFTs platforms. So there are different coordinate systems to sort of consider as you're building this, and what is the most lucrative demographic that you can monetize your venture through initially and then eventually. DeFi. Who wants to talk about the definition of DeFi?
I'll try again, Mariana. So, DeFi stands for decentralized finance, and it's the idea that financial transactions can happen without an intermediary like a bank or a credit card company, and the transaction can go directly from person to person, from buyer to seller, and it's useful to think about it in that way. That's the basic idea. It's really helpful for people who are unbanked or can't transact in traditional financial areas. And there's a huge opportunity with this technology to make transactions seamless and a lot less expensive.
Yeah, just today, Elizabeth Warren was actually talking about the unbanked, and for the first time, I've heard her be positive to the space. So that's actually quite a quantum shift, and it was all around the unbanked and those that aren't being serviced.
And most interesting, I think, about the centralized finance is that centralized finance has a lot of borders, and it's very challenging to kind of maneuver through. There's not much liquidity in centralized finance. And with decentralized finance, we're seeing that liquidity gets developed faster, friction is taken out of the system, and there's a huge amount of opportunities of providing not just banking type services, but variety of financial services that may have existed or not have existed in the past to populations around the globe. Do you guys have any examples of DeFi that you think would be very interesting for the audience?
At uh, at CES last year, or no, year before last, sorry, I saw a DeFi ATM machine, which is a really interesting idea for people who don't have traditional bank accounts to be able to move money around. So that to me was a really important technology, and it's those machines are being placed in areas where traditional banking is less accessible.
Yeah, I think that's a very interesting point. In Nigeria, we were working with a company called Crowdforce, which was trying to create a banking system, um, as most of the people that they were reaching out to did not have access to traditional banks. So the company created a partnership with three Pan-African banks. And then they went to the company, to the mom and pop stores in villages that were basically selling food, groceries, and some other items. They all had a POS system. And these guys created a wallet app, mobile type application that would work with each of these merchants' POS systems. And it would allow people to bank using their, mobile app and that POS system. And it would allow them to pay for their purchases in installments, all these things that we sort of take for granted that, a bank would provide in some other countries. So I think that was one of the best applications I've seen for the unbanked to date.
One that I'm actually keeping an eye on is Zend, XEND Finance out of Nigeria, interestingly enough. And they focus on this entire system of currency devaluation. And so many of these people in economically developed parts of the world really, really get hammered with devaluation of their currencies. So these guys have developed over the last few years, I think 3 or 4 years, they've been working on this to uh, try to offset the entire system of currency devaluation. And so I think that's a wonderful use. And it kind of comes back to what you were talking about, Mariana, where new things are going to come out that nobody really ever imagined could be done in a centralized system. But because of a decentralized system, new opportunities, new features, new functions, new solutions can emerge.
I think I love that one. I think another really interesting one I've came across just about, within the last month was a company in Venezuela that was creating a DeFi offering and issuing two credit cards to the consumers. And one of the credit cards actually served as the mobile wallet. So they were going after the consumer population in Venezuela that doesn't even have a mobile phone, which was quite interesting, and allowing them to use crypto to pay for their, basic goods and services. And in Venezuela, the devaluation of the currency happens so fast that one could be waiting in line to buy bread for a few hours, and the price would basically go up as you wait in that line. So solving this idea that you can purchase something instantaneously using one of these electronic type services and or cards is something that would fundamentally shift the way that people can purchase basic things in Venezuela. So I really love that application.
So my view of DeFi is that to a large extent, it began as a mere sideways movement, right? Taking existing financial infrastructures and just building them on blockchain. And in the world of finance, we haven't really had um, any real innovation since probably Black Scholes, right, with the creation of options contracts. But actually, now that the sort of more modern DeFi platforms are starting to play with things that haven't really a track record in the real financial world, such as liquidity pools and automated market makers. Those, I think, have a really interesting. I mean, the quest for liquidity has driven a lot of stuff, a lot of experimentation, like the whole concept of bonding curves that Bancor pioneered, and that ultimately sort of leads to the liquidity pool as a kind of a costless balanced portfolio, right? So in the world of investments, portfolio managers always had the problem of how to rebalance a portfolio because it's not frictionless. It costs. Um, and DeFi has actually solved that problem by bringing people to, bringing customers, basically the open market, to rebalance the portfolio for free. So things like that, plus the fact that the derivatives markets within crypto are starting to gain currency, they're starting to get much more approachable, is going to make is going to democratize a lot of the tools that we've had for a long time and most of the other world hasn't. So if you're a corn farmer, if you make corn, you've had access to futures contracts for forever, right? Africa, you don't. I mean, that infrastructure just doesn't exist. So they're farming stuff over there too, and there's futures contracts at a much higher level, right? But this DeFi really puts that in your wallet. It's like you could just buy the futures contracts. For that matter, you can buy options on the futures contracts, and you can do swaps, and you can do all kinds of other things, which really just have to do with education, understanding. Anyone who actually produces stuff, they know what it takes to make grain, right, or to make carrots or whatever it is that they make, orange juice, and they understand that business. So it takes a little bit extra to understand the complexities of a futures contract, but not a lot, right? And once you understand it, then it's just a question of access. With DeFi, you don't have to have a seat at some exchange. You don't have to go through the whole brokerage thing and pay the big fees and play with the big fish. You can make like super. So the whole concept of micro payments and micro lending then gets extended to the derivatives markets. Now you can have a micro futures contract, right? And that's exciting.
I love that. I also love the idea. We had a presenter at the virtual Infiom Salon from Brazil a couple of salons ago. He was talking about tokenizing the agricultural economy of Brazil. He didn't have the futures contracts in attached to it, but what it did do, it allowed people who are farmers to sort of borrow against their future production in order to do all the necessary farming to actually produce that production, which I feel is like the greatest. If you can set that up as a system globally for farming and for agricultural, kind of business development, it would change the whole hunger issues globally if this could be done effectively. So I love that idea.
Yeah, there's also, I'm working with a company that's working in an area that I think holds just unbelievable promise. If you look at where the world stores wealth, right, by far real estate is the gorilla in the room. $731 trillion worth of wealth stored in real estate, as compared with probably about 120 trillion bonds and other debt, and then there's foreign exchange and other kinds of zero kinds of things, right? But real estate is clearly the big gorilla. And we look at housing rates today, for example, are rising faster and more than they have ever risen as a function of all of this money that the Federal Reserve is creating. So everyone's looking at their home. So for Americans at least, but probably for a lot of other countries in the world, the little people, they have their wealth in the one home where they live, right? And everyone's looking at their home going up in value, thinking, wow, this is really great, but I'm scared it's going to come crashing, right? Because everything that rises falls, sort of, or so goes the mentality. And so we are, with New Ocean, we are seeking to capture that equity value and convert it into Bitcoin, because Bitcoin is a global market, as opposed to real estate, which is really um, and so this company is, so that what that means is that we have to go, we go to lenders, traditional lenders make a traditional loan to the home equity owner, and then those proceeds come to us. We buy the Bitcoin and hold it on behalf of the customer. Now this other company, Quest, has created a tokenization that is patent pending, that actually works at a very low level and even has priority over taxing authorities. So what that means is that one of our customers could start by tokenizing their home. And then that means that now they have an NFT that they can use as collateral within the DeFi markets against which to borrow, right? So we already have lending markets in the DeFi world, and there's quite a lot of liquidity. We're about to add real estate to that equation, right? And that changes all kinds of stuff. I mean, the entire mortgage industry then becomes, at risk of losing to the global DeFi markets. Um, this company is also in the process of a deal with the government of all public land, which is more NFTs on top or it's because most of it is jungle and it has capacity revenue capacity has been there the whole time, which is wasted. And then the government is also then going token, which is a land-based token, to pay the government employees, which is a good percentage of the population, et cetera, et cetera. So there's a lot that is just sort of when I see DeFi today, I kind of look at it as a black hole. It's just gaining weight, and the more weight that it gains, the more stuff that it sucks into it, until eventually it's just going to own, everything. We'll have a whole new world that is based on blockchain.
I would like to call attention to the fact that in DeFi, your identity is not necessarily your citizenship, date of birth, and traditional identity, but you are a blockchain address. So this has become an opportunity for ONGs that are working with displaced people and people that is beaten by wars, so they are detached of their traditional ways of proving their assets and identity. So I find that DeFi has proven also to be an innovative way to serve people in need in really fast solutions.
I love that, Leah. One of the films I've seen in the last 5 or 6 years was with Participant Pictures, which does really amazing stories, feature films and documentaries about, different issues on our planet here. Talked about the flow of migrants around the world. And there were about 7 or 8 million at that time of people who were displaced from their countries. They lost their, as you pointed out, citizenship and ownership and all those rights because of the wars and other atrocities that are being committed, and they had to sort of flee, to save their lives, basically. And 70 or 80 countries in the world today have barbed wire around the country, where, like about 2 decades ago, there were like 7 of those. So many of the countries are not accepting this migration, which is just horrible in itself. And I think if you talk to Tim Draper and some of the people who are funding the blockchain marketplace, he sees that eventually, because of DeFi and this ability to sort of own your own rights that Eric was describing with real estate and ownership of your a variety of assets in your name wherever you are on planet Earth. I think we may be going into a situation where the countries may be vying for you to become their citizen because of these new concepts in blockchain, which would totally replace that whole horrible situation that has gotten us with displaced humans all over the globe. So I look forward to
I think it's important also for like just everyday people to understand that in DeFi, most of your data, like who you are, your account numbers, your address, and all of that, is not stored in a single centralized place. And this has been, whenever all that data is stored in a centralized place, it's really ripe for hackers. And we've seen a lot of data leaks from those kinds of organizations. So for just like you and I, the fact that DeFi can help protect our personal data is also an important detail, I think.
Yeah, it's huge. I think that's the whole, yeah, with blockchain, this whole idea that the data is decentralized and not stored in some large, storage that can be hacked from many different directions and in many different ways is the key component of blockchain. So we have like 3 minutes to define a DAO. You want to try, Jeanette?
Sure, it's a decentralized autonomous organization. And what this means is it's a way of creating any kind of organization that is different from the traditional stockholders and all of that, which has a lot of sort of internal regulation from country to country. A decentral autonomous organization can have really any rules that you set up in the first place, and anybody who pays in one way or another gets tokens, and your voting rights is based on tokens. It's just important to understand that the way you set up your rules initially is super important because it's very easy to change at the beginning and a lot harder to change midstream. But once those rules are set up, activities and actions happen automatically based on those rules that you set up about what's going to happen. So instead of having to have votes on things all the time, you set up conditions and the blockchain determines what needs to happen, and then things change.
And many of the native chains that most of the projects today reside on, um, they are set up as DAOs. They're not centralized in a way that we think of a corporation or an LLC or some other form of organization here in the U.S. or in other jurisdictions. But they're basically set up as consensus economies where participants in those economies benefit from the economy, get paid by it, and have ownership of it through these utility tokens. Eric, you want to say something about?
I think what I liked about the DAOs the best, and I think to a large extent their value has not really yet been recognized even by the crypto community. What I liked about them is that they're independent of any sovereign. So when you want to organize, when you have a bunch of guys that want to do something, right? They organize themselves as an entity. The first thing they do is they go ask a sovereign for permission. They say, we'd like to create a corporation, and their sovereign keeps a register and says, yes, just pay me this much money, and by the way, you now have to abide by all of these rules. You have to do reporting, you have to do taxation, you can't do this and you can't do that, and all this kind of stuff. And everyone in the crypto world has followed that. The whole ICO craze back 3 years ago, back in 2017, was all really it was a mess that it was because everyone was incorporated somewhere. And my point the whole time was create a DAO. You are outside of jurisdiction of any country, right? So a lot of that has to do with touch points because the DAO, as any kind of blockchain entity, is isolated to that blockchain, right? We have, I mean, I think that probably in the next 12 months, inner blockchain communications are going to become focal. The idea of being able to move value across blockchains, and eventually not just moving value, but moving functionality, where you have a smart contract on one blockchain call another smart contract on another blockchain. And then that, I think, will give the DAO a lot more operational space, you could say. But it is definitely something that will have a transformative effect in the world because it will destroy the corporation. I mean, there's no way that corporations can compete with DAOs when DAOs aren't really obligated to do any particular thing by a sovereign.
Awesome. So, at that, we're going to go to the other room. Maybe next week. Next time we do these back to back, we'll do them in the same room. But today we have another room where we're going to discuss more current events and things that we published in our newsletter and everything that's going on in the news at the moment about NFTs, DeFi, and DAOs. If you like this format, send us a message. You can find me on Twitter, or you can find me here at the Clubhouse. You can text me in one of the back channels, and or on our website. And we'll see you guys in our Create Unicorns with NFTs, DeFi, and DAOs room, which starts right now. So thank you, everyone. I'm going to end this room. We can start with that.
Yeah. Oh, why is he not? Ah,
Hello, can
there
you
you go.
guys hear me?
Yes. Go ahead.
So, I just would like to introduce myself. Right now, I'm based out of India, and we've been doing a project called N2O.tv. And it's I would like to explain more about that, but I've been wondering whether to do it as a DAO with an ICO for some time, and I just don't have clarity on that because I just found your room over here and I just got excited, and then when you guys said you're moving rooms, I decided to like come along. So I don't know if you have a purpose for the room and an agenda. If you have that, then I would like you guys to go ahead and I listen in, and then possibly I can pitch in later. So I don't mind waiting. It's
Yeah.
late in India, but I'm going to be awake for some time, so I can listen in and just get to know you guys, and then I can talk.
Okay. We're mostly looking for people to present questions. So think in your mind what question you want us to answer, and we'll call you back up.
Oh no, so in terms of a question, I'm at a place where so N2O.tv, I will have to explain the idea to you guys, but uh, uh, right now the vision I have for it is TV for the people, by the people, governed by the people. So I would like it to be a completely decentralized DAO. Right now, where it is, there are a bunch of us who are managing it, and I think it's reached a stage where it can become a DAO, or we make it like a corporate structure, and that's where I am right now.
Well, good
So,
news. We've all spent decades in the entertainment industry, so we can definitely answer that question. And
so
glad
if
you
others
came.
have other pending stuff, they can continue, and I can catch you
Yeah,
guys off
let's
later.
do it at the end. We'll introduce our speakers, we'll go through some news, and then we'll come back and discuss
Sure,
your venture. How's that?
sure. Thanks a lot,
Awesome.
man. Who was that, Mariana?
Yes.
Okay.
Hi. So I'm Mariana Danilovich. I'm the founder of Infiom, which is a consensus network of blockchain professionals in NFTs, DeFi, consensus blockchain spaces. We have been around since mid 2019. Before that, I ran Bit Angels globally, which was the original angel network that invested in the launch of Ethereum. Infium is really focused a little bit more on acceleration of the promising ventures in the space, kind of getting it to the next level. And as many of the people pointed in our earlier discussion today in the clubhouse on how to kind of grow the audience for crypto and blockchain companies in general. And today we have Jeanette DePatty, who's one of our co-producers at Infium.
Hi, Jeanette DePatty, professional tech explainer and fine arts technology human mashup and corporate dance specialist. I've been writing and researching about the blockchain for quite some time now, and I'm super excited to be here.
Leah.
Hello, I am an attorney with more than 25 years in traditional banking, securities, and assisting startups and financing projects, and have been working in the blockchain for the past 4 years. Now I am here with Metis. Metis is creating an easy to use technical organizational platform in the blockchain, making it accessible for everyone to get their business on the blockchain without having to know how to code smart contracts.
Awesome. Daniel?
Hi, how are you? This is Daniel Truque. I work with Symbiont, leading enterprise blockchain company focused in the financial arena. I'm also founding partner at Satoshi Capital, which is a blockchain consulting that focuses on advising crypto mining projects, advising governments on CBDC related projects, and also on quantitative crypto strategies.
I'm so glad you're here, Daniel, because we want to talk about that first article. We publish a newsletter, Infiom does every Sunday, where we kind of pick the most interesting news about DeFi, NFTs, and DAOs. And Core Scientific, which is one of the largest Bitcoin mining operations in North America, is trying to go public on NASDAQ, but they're going to do it through a SPAC, kind of similar to what eToro has done in Europe. And I just want to see what your thoughts are on these SPAC mergers for blockchain companies.
Sure. So I mean the SPACs is really like a very it's a more streamlined way of getting into the market without just having to essentially raise new capital for the company. Really, a SPAC is a quick way to give liquidity to existing investors. It may not necessarily drive a higher valuation, which is what some people may interpret it as. I would actually argue that with a regular IPO, you could probably drive a higher valuation. It's really more about just like speed to market, being able to like quickly offer some liquidity to existing investors. That's why if you see it from the point of view of an investor, it's always important to understand what is the motivation of the company. Why are they doing a SPAC and not a regular IPO? Are they just trying to minimize the process, or are they just looking for a quick exit for existing investors? So the valuation, of course, is what drives whether or not that would be a good idea to simply take those shares off the hands of investors that want out. Because of course you should always be skeptical of why investors want out. If of course you realize that it's institutional investors that have been invested in the company for between 5 to 7 years, you realize that most likely that venture capital fund has already reached its lifespan and they're looking to get some exits. So that'll be okay. If on the other hand, you actually see investors that have been there for like 1 or 2 years and they went out, then that means they're not buying the growth story. So that's where I would be wary. So it's always important when you see a SPAC, like understand what is the motivation as an investor to see if it's worthwhile investing in it or not.
I wonder if with the SPAC and blockchain mining company, it's really more about speed to market because SPAC fundamentally is like a blind pool, right? When you're investing into a SPAC, you don't know what it's going to buy, and then eventually, and it's traded publicly, right? And so the SPAC then invests into something that you as an investor into the vehicle may have not known at the time of your investment, and hopefully you're expecting a faster and larger return than you would if you were just sort of investing in a company that has a share price and all the information attached to it.
Yeah, so there's two ways of doing that because like if it's an existing company that uses the SPAC vehicle to raise capital, that is very different from call it a self-standing SPAC that raises money and then goes hunting for something to buy. So just want to make that distinction. Even though like the structure may be the same, there's a difference between a company wanting to go public using the SPAC structure versus what I would refer to as a search fund that goes and finds a company to buy.
But it seems that the SPACs have to sort of exist prior to these transactions. Isn't that correct?
Uh, yes, but you could create it right before you do the IPO.
Right.
So it's like essentially like as opposed to creating it and then like the creators of the SPAC going and finding something to buy, you could actually just talk to a law firm to create a SPAC on the spot for your IPO. It's just using the same structure but with a different for a very different use case.
Yeah, it's quite interesting because the SPAC in Europe, that was a $20 billion SPAC. that merged with eToro was around for a while. You know, they were trying to figure out what to do with it, and then they merged with eToro.
Okay, well, yeah, in that specific example, that's kind of like the original use of a spec, not kind of like the direct listing approach that some other companies are using it for.
And I wonder if there's going to be some sort of consolidation in the Bitcoin mining market, you know, because of what's happened with China shutting down the Bitcoin mining, and now, you know, three different miners using a SPAC to go public in the US. I think there may be some sort of a roll-up strategy that's developing here as we speak.
So actually, I wish that my partner in Satoshi Capital would be here because he's got more of a background on the mining side of things. Uh, we are actually at a very interesting point in terms of like mining profitability because um, after the big drop from in Bitcoin from 60K down to like mid 30s, um, we were kind of like in the worst case scenario. Difficulty was still high, but price had just pretty much halved. So you had a situation where price was low and difficulty was high. So it's the worst case scenario. Under those conditions, 2 to 3 months ago, if you could still make the economics work to create a mining operation, you don't need to worry about the conservative scenario because you're literally launching in the worst case scenario. Essentially, like from then on, everything's upside. I would always caution though that even though like you'd be at the bottom, you don't know how long the market can remain at the bottom. What has happened over the past couple months or so is that you've seen how difficulty has actually gone down to adjust to the lower price, and also um, that's also showing, for example, like the miners in China that are exiting. So it's actually like it's a very good time to get into mining. It's a very good environment for it, and there's also the push for renewable sources, and if you have the right network to access those cheap sources where you can ideally get energy for like 2 cents a kilowatt, you're golden. Once you start flirting with like 4 or 5 cents a kilowatt, then it's you start building in speculation into your financial model. Something that many people from the outside don't understand about mining is that miners are not speculating on Bitcoin. Miners are mining. Essentially, you go, you get the Bitcoin, and you liquidate it right away. And those are the cash flows that you're building into your financial model. If you happen to hodl that Bitcoin or something, that is a different business. But like mining itself should never be speculating on the price. It should be you mine something and you sell it. And that is in general how we have approached mining projects in the past, like by separating that. Because since we also do the quantitative investment side of things, if a miner wants to hodl and perhaps invest in some of our strategies, that's a completely different business. So we always like caution them, like one thing is the mining, there's no speculation, and then there's the investing and speculation on the market. So make sure that you think about them separately and that you don't link them together.
And that's so fascinating because this Core Scientific actually owns quite a bit of Bitcoin, you know, in their treasury, if you like.
Yeah, I mean, like, and of course, like, if you're in the mining business, you're definitely kind of like already like to your neck in like soaked in the Bitcoin and cryptocurrency world. So it's natural that you're gonna be bullish on it long term. I just want to clarify that it's like there is a difference between one business model and the other one, and yes, they can go side to side, they can run side by side, but it's different purposes. That's why, for example, like in some of the projects that we've seen in Latin America, we've seen retail operations that are mining at 10 cents a kilowatt. That that is just not profitable from a mining perspective. When you're mining at 10 cents a kilowatt, you're doing it for philosophical issues. You're doing it because you want to help the community. But once you factor in the cost of the mining equipment and when you're paying on electricity plus operational costs and everything else, you're just better off buying the Bitcoin out in the open market. You running miners is really just to help the ecosystem. It's not making you more money than if you would just grab all that money and invest it directly in the market.
It's a very good point, you know, and that people sometimes miss when they think of mining. Um, there's so much activity right now. I'm going to ask you one more question, Daniel, in terms of different funds that are being formed in sort of DeFi space. Can you maybe just comment on that? I was sitting on an investor call with Pantera the other day, and I was just astounded that their venture fund had like an 8% only, you know, uh, companies that have failed to date, which is unbelievable for a venture fund. But they had basically a hedge fund, a venture fund, some sort of hybrid funds. So, what kinds of funds are you seeing right now that are being launched with cryptocurrencies, Bitcoin, etc., in the market with some of the larger institutions?
So I'll tell you kind of what I see kind of more on the smaller hedge fund side, which is kind of like my area. I would say there's like three type of funds. The ones that are pretty much like equity investments, so they're just looking for tokens to buy, approaching it as if it was a venture capital fund. Then there's the quantitative investing, which essentially you're just creating algorithms that benefit from the volatility in the market. That is the focus of what we do with Satoshi Capital and how we advise on the type of managers that we advise. And then of course with DeFi, there's this whole new area of creating funds that generate yield, so like yield farming operations. I have not gotten into DeFi, so I'm not. I cannot opine that specifically on like the long term profitability. Um, my caveat against it has been initially I was erroneously thinking that DeFi couldn't scale because this type of DeFi protocols are not easy for the general public. So you will need somebody to actually give you a user interface. Ideally, you want somebody to give you customer support, and ideally, you also want somebody to give you insurance for the funds. And I always thought if you don't have any of those three, how is this going to scale up? Of course, what is important to keep in mind is that DeFi can expand a lot from where it is right now, and it has expanded a lot from what it was like a year ago, because even if it's not going to get to the institutional level, which again I really doubt it will anytime soon unless the technology changes and regulation changes, but there's still a lot of growth that can happen within retail, so the bubble in that term can continue. Also, I've learned now there's ways of providing UIs and to a certain extent customer support without actually being directly linked to the project, so you're not in danger of running afoul of regulations. Of course, it's a gray area, but that's something where like I wouldn't want to operate. But I think kind of like one of the most concerning things is recently, who was it? It was Berkowitz from the CFTC. He was saying how um, he was opining on how DeFi projects. Let me just quickly look this up to get it right. But essentially, um, what I recall, the issue was that he was saying that market participants would actually be at fault because of operating in the DeFi space. So I think it was like a week ago or a little over a week ago that there was a cease and desist from the New Jersey Attorney General towards BlockFi, which is CeFi lending. But even though they are CeFi, they actually invest a lot of the capital in DeFi, and that's how they generate the high yields that they can then offer to their clients. And essentially, what the New Jersey Attorney General was saying that that's essentially illegal activity. They shouldn't be doing that. And actually, coincidentally, like a week earlier, I had heard Berkowitz from the CFTC saying that in general, the CFTC brings actions against parties that are facilitating banking like transactions without a license. In DeFi, the problem is because the participants are communicating with each other, so there's really no centralized agent to point their fingers at. And as I mentioned, there are ways to provide the user interface and the customer support and potentially even insurance schemes without being directly related to the project, so they cannot take action against you. However, what Berkowitz clarified is that it is illegal not only to facilitate this, but to actually be one of the participants. So if you happen to be buying and selling DeFi products, that is illegal. Of course, regulators never take action at that because it's easier kind of like to go for the facilitator as opposed to the participants. But in the case of BlockFi, that is a very large, well-known, meaty, great example of a participant in the DeFi market, and they could potentially take action against them. In this case, actually, it was the state of New Jersey that took interest in them. But potentially, the CFTC may be kind of like telegraphing that they may start taking action against large world-known financial players in DeFi markets. So for hedge funds that raise capital for like a DeFi focused strategy, that would essentially be putting a target on your back, because the CFTC is going to come after you saying like you're participating in an activity that is illegal, and then they will shut down your fund, and who knows how many fines they will drop on you. So at least DeFi is an area that I stayed out of initially because I was skeptical of scalability. And then once I understood the scalability, then there was this still uncertainties about regulatory compatibility. So I've stayed out of it. Still, I mean, there's definitely money to be made there. I'm just not sure how it can be done, minimizing the regulatory risks that are associated with DeFi at the moment, at least.
And I'm glad that you mentioned that, because there is a company called Purify, which is onboarding institutions into DeFi. So I'll share it's purify.io. Take a look at what they've done, and they work with some of the largest banks. And there are certain components of DeFi that I think institutions are using as rails, kind of to distribute some of the liquidity, if you'd like.
Oh, that's interesting. Yeah, I definitely would like to learn more about them because, as I mentioned, I'm learning all these different ways that services can be offered related to DeFi without actually doing the DeFi directly, and that is legal.
Being a
It's actually
platform.
the participating in the market what is not. So if Purify is actually focusing on non-US investors that do this, or bank or institutions, it should be fine. The problem is when you have US based institutions participating in this market, because technically US institutions or persons are not allowed to participate in DeFi markets, because any uh, those type of securities need to be traded in a regulated exchange according both to the CFTC and SEC.
Yeah, there's definitely going to be quite a bit of regulation coming down. I want to also introduce Carlos Rodriguez, who's one of our BD advisors at Infiom. Hi, Carlos.
Hey, how's it going, Mary?
You want to just say a little bit about your background?
Yeah, I just want to give a little bit about my background. I'm an executive conference producer within the IT and finance space, as well as blockchain, focusing on digital assets and now in AI as well. So I'm really excited to be here. I'm as well part of a MIT leadership executive program right now that I'm completing, and excited just to kind of share my thoughts about the different NFTs and SPACs, as well as different insights from executives that I kind of hear through different strategies and PowerPoint decks as I accumulate different presenters.
Yeah, Carlos has been very helpful to um, kind of attracting and mentoring our heads of innovation at a variety of Fortune 500 companies as we try to bridge the gap between what Daniel's talking about, big institutions, and what's going on with the startup space. And with that, I think, Renakar, if you would like to come back and let's look at your question as we look at it from the NFTs and DeFi perspectives, and even DAO perspectives for an entertainment company. You have to raise your hand so I can bring you back up to the podium. There you are.
Yeah,
Okay.
hi. You can call me Vinu. My
Vinu.
full
Okay. Tell us
Vinu
a
Kumar.
little bit, tell everyone a little bit about your background and the company that you are launching.
Yeah. So my background, um, I'm an engineer at heart, and I like to do research in technology and see how technology can be applied towards, I wouldn't say business goals, but social goals. The way I see it, I see money as a transaction cost that needs to be, what do you say, something on the table that everyone appreciates because of the time value of money. I did my bachelor's at IIT Madras in mechanical engineering, and then I did my master's in micro and nanotechnology at Berkeley. This is in 2005. However, I was interested in the mobile and the internet space, so I played into the mobile and internet space from 2005, I would say. And last corporate I would say I worked was at Zynga. I was a product manager for Farmville 1 and Farmville 2.
Apart from that, I've hopped many industries and many roles. At Berkeley, I was part of Best Lab, I don't know, and BID, Berkeley Institute of Design. So I would say I understand design at heart, and I understand technology, and I mostly come from first principles. So some of the questions, if I may ask, may be dumb, but idea is to build up from there. In terms of where we are, in terms of N2O as a project, if anyone can interrupt me at any time, because I'm just like, I've not prepared a pitch or anything, because I just realized to scale up the project, external funding might be required. So N2O as a concept was, apart from N2O being laughing gas, it's about N people coming together and forming an O, and where the community is the bank. That's the idea. Right now, the technology has reached a place where largely an AI is running the TV network, and it's decentralized in a way where it's man and machine working together. And what happens right now is N2O.TV is layered on a technology that we have developed called Mappy.tech. There's a website for that. Mappy.tech is the website. It's decentralized computing. So right now, if you come to N2O.TV, we are not utilizing it, but we could be using your computer cores to do mining if required. So if you're watching N2O.TV, we could use it for mining and actually pay you to watch N2O.TV. That's where the scenario is. And the AI right now is picking up YouTube videos based on certain keywords and lining up as a playlist and playing it as a TV channel, ideally if you're in the same time zone. And thanks to Corona, what has happened is I feel whatever YouTube links or videos the AI is picking are almost NFT grade. So I don't know when and what is an NFT. It's highly quantifiable or qualifiable. I don't know how you want to call it, but largely it's a decentralized AI, as in it's open source project and it's on GitHub. But I feel that we are at a place where if we say it has to be optimized for money, then the AI can go on a different route. Ideally, I would like the vision to be towards humanity, and money is something that's required for sustaining it. So, this is where I would like to stop. Questions are welcome. And more guidance is where I'm coming from in terms of how to open it up.
Awesome. So it's entertainment for people by the people, kind of. That's what you said, I think, earlier as well.
And
Um,
governed, I would
and
say.
governed by the people.
Yes.
I like it. So it's kind of like, YouTube is entertainment, by the people for the people, kind of a thing, but it's governed by, the large company, Google.
Hmm.
And here you're basically taking that business model and you are trying to convert your users, viewers, your participants in your community so that they're actually owners of the company, of the DAO. So that's what the DAO would do here. Beyond, being open source, it would allow people who are contributing value to this community, whether they contribute content, whether they create community to view this content and therefore create additional revenue for this content, whatever the value, whether they're, trying to make the scripts for AI more usable so that your playlists you get more and more interesting for certain demographic, etc. Um, those people would be compensated by the token inside that DAO, and they would also have ownership of that token that may increase in value if DAO increases in value. So they fundamentally become, like an ambassador plus investor versus just a viewer or content producer. So,
Yep.
so that's the idea behind it, right?
Yes.
And
And
go ahead.
really, right now we are using YouTube because YouTube is allowing us to stream, and we are taking the cost. I see no reason. I'm not going to shut it down until YouTube says no, you can't play with it. But I'm also helping the YouTube community. I would say if people want to host it there, but if required, we have technology to decentralize the entire cloud stack also, which is right now I would say technology becomes a commodity very fast. But as a whole, if you ask what is N2O, I would say usually people come up with like vision statements and mission statements. I would say N2O per se, if applied well, could be the vision engine. And then the community is watching some content, interactive content live, and that's the vision of the community. And there's nothing better than that, where you're getting a video out as a vision, is where I'm coming from.
Yeah, and it's interesting how you set it up in terms of just the technology platform, because I love the idea that you guys have AI that can search through content and create playlists, because that's almost like creating television networks on the fly. We did this with Media Zone when I was running outward facing functions. It was like a Netflix company, but we also had live channels and on demand. And the creation of the 24/7 live channels that someone could tune into is very hard. It's actually harder than like doing VOD stuff like Netflix and Amazon. So I like that idea that you can create those using AI. What do you
And
think?
a serverless design, as in we have a DigitalOcean server that's just seeding it. But when you come in, you participate in the server network. If YouTube decides to cut us off, we can leverage your hardware that you are using to see it to fund it. So that's the technology stack we have, which is completely decentralized OTT platform.
Is it shared streaming or shared storage?
No, storage has to be somewhere else where someone on the blockchain can agree, or ideally, there's a lot of already projects who are doing it. We'd ideally like to partner with it, but shared streaming is what we are talking about.
Okay, so ours was shared streaming. It was called Media Zone. It was in Silicon
Okay.
Valley in China. Yeah. And in the shared streaming, you have significant reduction in cost, in the CDN cost. And
Yeah.
Theta is shared streaming as well. That's one of the comparables you should look at in the
Hmm.
space that actually has tokens, Theta and Fuel. Yeah. And they've done really, really well, with their offering, but I think there's a lot more players to be created with variety of content and variety of solutions in the space. Um, the shared streaming would then be if I manage one of the nodes, I would get paid for it basically as a participant.
I no. So apart from that, what I also wanted to tell you was when you're watching it on some hardware which has some chipset, and the technology that we have can use that chipset for mining anything else if required. So ideally, you can say, okay, I want to contribute to my computing resources for this. Like especially if you're watching it on your smart TV, your smart TV has a quad core nowadays, and you can just say while I'm watching content, I can mine on the fly for some other project if required. All I'm saying is, um, and I'm not saying it has to be on Intuo.tv. If you want to copy the code and install it anywhere else and do it for your community, you're welcome to do it. But right now, I think we are at a critical flux where I think the AI is getting smarter than me. So like, and the AI is adapting depending on right now. Even though I'm from India, I've just like marketed a bit on LinkedIn and Reddit. Good amount of my target audience is coming from Singapore, and I don't even know why they're coming from Singapore. But and the AI is adapting to Singapore content. So all I'm saying is I have a bunch of technology, and I think it's good for scale. And I think it is at a stage where I would like more brains involved to see where this project can go. My friends are not that much into cryptocurrency per se, but they are thinking about it in a more traditional manner. But I would like it to be a community project, and I feel a DAO or I don't know how to take it up, would be a better way to go forward. And hence I thought, okay, fine, I will see, I'll have a discussion with people on Clubhouse or other places and see how to take it up as a next stage.
Well, I think it's a brilliant project. It seems to me that you have more than just shared streaming. You can do share kind of variety of different computer power
Yes.
capabilities within the machine. That's like the next generation of it, which is great. Um, and you're right. The only way that you can fully experience what this technology platform can do is to have some use cases with variety of companies and variety of content and variety
Hmm.
of users, using the content in
Hmm.
variety of ways to figure out what the network can really create, um, which is where you are. So yeah, I think this is great. I have a company I want to send your way to look at the platform as we sit here today. We
Sure.
explored a bunch of NFT platforms and other tokenized platforms around the globe, and it would be interesting to see how yours is being used. It's necessary to do what you're doing to kind of take the media companies to the next level. So I think that's brilliant.
Cool. So then possibly we can connect a bit later. We have a
Yeah.
Discord server. How many of you are active on Discord? But I'm trying to move everybody to Discord so that a more consensus based decision making. And I don't want it to be like my project, but a community project. So
Yeah.
I'm seeing where this can go. So
Absolutely. Use Discord, Telegram, or you can just send me a message on Twitter or in
yeah, I've
email.
sent a back channel message. So possibly we
Yeah.
can take
Yeah.
it from
Yeah.
there.
That sounds good. Uh, Jeanette, you have any thoughts, Leah, about some of the things that Venus talking about?
I think the M&E space is ripe for this sort of disruption, and it's really interesting. It'll be interesting to see how the information about the mining will get to the customers. If it's in a way that they can understand, or if they just don't care, it just shows up on their bill. It'll be interesting to see how that all shakes out.
Well, we are not utilizing it. All I'm saying is, if a million people are going to watch it concurrently, the cost for us to run it is only $5 a month. But if a million people are watching concurrently, I have quad core into a million CPUs. At which point, if the community is going to be online 24/7, I can compete with AWS.
That's amazing.
Hmm.
It's amazing. That
And community can benefit from it by just watching content. As in, you are at a state where if you are ready to watch video, you can get paid. That's what the setup is.
That's wonderful. I think many people around the globe would resonate with that. We've seen it with NFTs and gaming. We had actually brought you up on stage because we had a bunch of articles in our newsletter about this, where people are able to get paid. By watching games and participating inside some of these games on the blockchain, and kind of quit their day jobs, etc. So I feel that, why not do that viewing film and television programming and creating distribution opportunities and marketing opportunities for that programming?
If I could add something, from Metis, we focus on the DAOs being the special entity to promote cooperation and collaboration. The thing that, in connection with what Jeanette said, you have to try to figure out really soon is how to turn the benefits of such mining that you can propose to your viewers into something they can get a hold in, because I don't know how are things in India for uh, making use of these cryptocurrencies or crypto assets that will turn out from your mining. But a key issue in your success getting more viewers interested in the benefit of the mining will be to make sure that the mining represents for them an asset they can use right away. And that could be an issue to take on account in your structure.
Thanks, Leah. I understand, but where I'm also coming from is, hey, I'm not looking at making N2O.TV dot like big and compete with YouTube and other stuff. All I'm saying is I have a piece of tech. If some other community wants to use it and benefit from it, they are welcome, and we can help them install it if required. And they can mine their own stuff if they want. As in, I'm not saying I want to be the central layer. I hope that's clear.
Yeah, you're the platform, you're the DAO. It totally
Yeah.
makes sense to me. And then you're not in the business of aggregating content, distributing content, etc. But you built out the DAO that allows people to use the capacity in their own machines to participate in this community and earn revenue.
Yeah, and in their own community, as in, and you can have your own, like, I don't know, Janet can have her own human fine arts community, like everybody can access.com can have a TV channel, and all of you can decide to mine for some cause if you want for that month. And if bitcoins come out of it, then as Daniel was saying, sell that bitcoin and like donate it for a community that you feel passionate about for that month. All I'm saying is, this is a platform that can help a community be self-sustainable by just watching content.
I love it. And sharing your hardware, which is
Yeah,
great.
and
Yeah.
hardware which you have already paid for in full, and all you're doing right now is like it's switched off. In the
I
night you can
love it.
just like have your TV on, and it can be mining or making money for your community.
Yeah, I've spoken to so many people so far in Binance Smart Chain, and in on the Ethereum, Polygon, etc. In different native chains, trying to find shared streaming and shared storage platforms that make sense for media. And you'll be shocked. There's just aren't that many of, if any, and they don't want to share them. Like Contentos has one, but they don't want to share them. um, they're on the Binance Smart Chain, which kind of is silly because if you share the platform, that's how you really allow it to sort of, flourish. So I'm with you on that.
And the way I see it, I think right now it's at a place where I can involve more people, because I would say I've kind of like saturated my funds and my bandwidth. I've been at this problem for 4 years, and I would like to give it to a team which can take it to a next level while I take like a couple of months off and like switch off from this problem. And that's where it is, so that I can come back with some energy. So we are actually a team. We're based out of Hong Kong, Dubai, London, and San Francisco. Bunch of us, and in India, 4 5 locations. But what's the next step? I said, okay, I will figure out and let know. Right now, we know we need $1 million if everyone needs to come in full time, because all of this has been happening like half, as in, and I've been the only one who's been doing it full time, because I had money and I'm like single and I have no responsibilities. But if we have to grow it to the next level, I think it needs a bigger community which understands what we are doing.
Yeah, I agree with you. I think I've seen, you know, uh, thousands of projects that were launched in the last decade that, because of what's happened with the crypto market, are sort of in a similar situation that you are in, which is there's a lot of work put into it, a lot of good technology. You have AI, you have hardware, software, integration here, shared streaming integration. That's a lot of tech. That was integrated for a specific marketplace, and then the market's gone up and down and up and down, and it's hard to keep raising both venture funds and or community funds if you'd like to get this to the next level. But I believe that there are plenty of companies in the space that can use this technology, or coming into the space that can use this technology to help you get to the next level while you get to the next level with a platform. So that's what I think a DAO would do for you. So it's a good that you asked that question.
Yeah. And I also just want to chime in from, strategic perspective. You might want to take a step back, look at exactly the targeting that your AI is doing for Singapore, find out who the key influencer is there specifically in that market, and probably approach them. They might be willing to do some sort of share model, or there might be some other opportunities to really facilitate the growth of your company specifically in that area, and then branch out into other areas.
Yeah, so just to clarify that on Carlos, we've not run this as a company yet. It was a pet project. Now I'm wondering whether we should put a more formal structure and bring money into the picture. It was just a proof of concept where right now the AI is dominating me. I'm just saying it's been slowly, it's a project that's been on for 2, 3 years. And I would say more than the AI growing, I think the quality of content on YouTube has grown exponentially as Corona set in. And I haven't been marketing one channel for 2 weeks, but N2O.TV is the leading game. And then when you come to N2O.TV, what content gets surfaced, I don't have control. The AI has control. So it's managing retention and engagement and viral rate and everything. So all I'm saying is, right now, the growth rate of N2O.TV is not in my hand. It's in an AI's hand. So that's all I'm saying. Now the AI, of course, the code can be changed, but the AI is adapting, and I've chosen it to keep it like that because I'm not someone who can say what should be played. The AI is deciding among the channels that I have. So you can, I can possibly, I don't know, I can, I've shared it in back channel. You can go to bit.ly/N2O capital TIME time. The whole server runs out of that Google spreadsheet. And when you open a tab, a subdomain gets created, and inside the subdomain, you can have more channels. So you have kids.n2o.tv. So ideally, everyone's struggling with kids content, but the AI is tailored to pick up only kids relevant content, and bunch of my friends who are parents are managing what needs to be played on kids.n2o.tv. So my friends, kids don't know YouTube, don't know anything. They just know N2O. Okay, so and they will just tell them please play N2O, and they switch it on the TV. So all I'm saying is, right now the AI has reached a stage where it's dominating me. Okay, but anyway, coming back to the topic, you guys seem to be the experts in terms of how to bring in money into the ecosystem and how to take it forward. So guidance from you guys on that front would be helpful, in terms of how, like, possibly we can like schedule a call offline and see, okay, does it make sense to do an ICO or a DAO? I don't know where to go next. So that's where it is.
Yeah, it's a very interesting question, and something that we deal with daily in our business, which is how do you take these projects to the next level? So we can help you with that.
Thanks,
Um,
Mariana.
you're welcome. So let's just address the last two, I would say, newsletter articles since we're finishing up today's discussion. There was one where a 12-year-old made over 160,000 in Ethereum on NFTs in one day. Uh,
Yep.
he's
Yeah.
12 years old.
I was I was already feeling pretty inferior to like all these folks like they spent their time during the pandemic creating an Emmy winning musical in their house, and now I've got a 12-year-old kid to contend with. It's a little much, but it does speak to the opportunities that are there. I mean, he did have some help. Dad worked in the industry, but it's I think it speaks to how much easier it is these days to spin up those kinds of NFTs.
Yeah, and it's really interesting that one has to have just an entrepreneurial drive and desire to kind of jump into the space right now to kind of figure out where it's going. Um, Polygon co-founder, on the other side of this, Polygon being one of the largest Indian-based layer 2 companies on Ethereum. that many of the other projects are being launched on at the moment. He sees NFTs and gaming as the way that people are going to be drawn to the blockchain. And so they believe that, you know, gaming industry is already larger than film and TV business in the US, at least, and globally. And with NFTs and with all of the opportunities of selling NFTs inside the games, he's seeing the ability of that market to be, you know, be even bigger than Hollywood, which it already is, but let's say it gets bigger than that. What do you guys?
Well, I'm constantly astounded by the M&E's industry's ability to underestimate the games market. This is not new. I mean, when I started writing and speaking with NAB, and we started saying, "Hey, esports is coming. This is a big deal," and continually, people underestimated the value of these markets, and I think it's the same with the gaming industry. You know, people spend hours upon days with this content, and they become very emotionally attached to it. And I think that's a big part of what's driving that value.
I also have to say that there's a natural synergy between the gaming world and the blockchain, because this is people that feels absolutely at ease working and interacting with a figment of imagination, with something that's only in the internet. So it's normal to expect that the mindset of these users will be very well suited to whatever is going on in the blockchain. This said, well, at Metis, we tend to have a different view. We see the blockchain like the big equalizer that allows everybody to bring their innovation and their businesses into the new economy. So that's also worth considering. It requires educating people because there's like a big barrier of feeling that it is complicated, and that's what we are trying to tell the world. It doesn't need to be complicated just because it's a blockchain. There are alternatives.
I also was on a really interesting call earlier today. Basically, AWS is launching into the NFT space. So I just want to point that out. So it's definitely a game changer. People should be watching out for that. And it's going to kind of change the industry. They also have developed some quantum ledger technology for blockchain, just because we know quantum computers are coming up really quickly. So just a couple competitive things that you might want to add onto your SWATs.
So, Carlos, how is AWS getting into NFTs? That's quite interesting.
Yeah, so they have the quantum ledger database. So they have two different systems. They have a centralized system and they have a DeFi system that they've launched, both of them. So those platforms are in existence. They just posted their first cryptocurrency job as well online. So there are some very interesting things going on in the background in Amazon.
So if I'm Warner Brothers and, you know, I launch 190,000 NFTs off of that Space Jam, you know, animated film, um, how would I use AWS for that?
Yeah, so basically they're setting up a similar system probably to, and I can't speak, exactly to it. I'm just assuming here that it's going to be a satellite system kind of similar to what Starlink is going to be doing.
But to be clear, the Amazon Quantum Ledger has nothing to do with quantum computer and has nothing to do with blockchain. It's at best blockchain inspired. My understanding is that the Amazon Quantum Ledger is simply an append only database. So essentially, in situations where you benefit from the immutability of the blockchain, but you don't want to run the infrastructure, or you don't want the players in your application to run nodes and stuff, but you're willing to trust Amazon, then you can deploy something in the Amazon Quantum Ledger, which is simply telling Amazon, here, write this information to the database and don't allow any erasing, only appending, like the advantage of the blockchain immutability, but obviously much faster because it's a centralized database, and you're just essentially taking Amazon for its promise that they're not going to change anything. Which, why would they? I mean, especially if it's something where they have like no vested interest. So there's actually some lightweight applications where like blockchain may be overkill, and then trusting Amazon for that would make sense. But to be clear, it has nothing to do with quantum computers, and it has nothing to do with blockchain. It's actually an alternative, a very lightweight alternative to blockchain itself. And most likely what they're doing within NFTs, one of the biggest issues with NFTs is that the images don't live directly on the blockchain. They need to live somewhere else. And if the author of the blockchain, the issuer, whatever, stops paying whichever server is hosting the images, which usually the NFT has a link to an outside resource. By outside, I mean off chain. If that link is broken, you end up with an NFT that just essentially shows you a 404 error where the resource for the image is not found. So I would assume that what Amazon is doing is simply providing a service where they would, anything that is issued on their platform, they promise to keep that image there in perpetuity. That way you at least you work around the issue of who's gonna pay the bills for maintaining the image related to an NFT. And I think that'll be like a great service for the industry, because that lack of direct connection between the NFT and the off-chain resource where the image lives, it's a huge flaw in NFTs.
Yeah, and I definitely, once again, it is a centralized format. It is being optimized for quantum computing specifically. But that being said, I just mentioned once again that I think that you should add it to your slots.
Awesome. So I am sure that with the proliferation of NFTs and as we track it here, day by day and hour by hour of what's going on in the space, all of the large companies are going to have their own version of participation in this space, because it's affecting almost every industry. And we will be discussing how that is or isn't the same as what's going on with some of the startups in the space, DAOs, etc. So we will be back here next Wednesday. We have a virtual Infiom Salon on Zoom. You can sign up on Eventbrite. You can also find it on our website. Infiom.com is our website. And we also publish a weekly newsletter, which you can find on the website and subscribe to it. We then discuss that weekly newsletter in this event, this 1:30 event on Clubhouse every Wednesday. And we have 4 presenters, which are CEOs, heads of innovation of Fortune 500 companies, or investors in the space at the Zoom event. Then that every other week, we actually have 2 Clubhouse events. And today we pioneered one that's about asking questions regarding NFTs, DAOs, and DeFi. So I want to thank our presenters for being here, some of them for both of the hours. I really appreciate our participants for being here. Some of you, again, for both hours. Thank you for being with us. And we'll see you at the Zoom event next Wednesday, where we have 4 presenters talking about their ventures. So thanks, everyone.
Thank you, Mariana.
Thank you.
Always a pleasure to be here.
Thank you.
Thank you, everyone. See you next week.